All right, for you guys just joining us, we have several people coming on tonight. We had a couple technical difficulties getting started. So we're gonna give everybody just a few more minutes, probably about 7:05. We're gonna go ahead and get started. For now, like I said, we have a lot of people in the chat box and stuff, so I want to keep everybody muted to make it, a better experience for everybody. Just a few more minutes, we'll get started. Nice. Exciting. I'm really excited to have you guys all here with us today. Just a few more minutes, we'll get started. For you guys that just joined in, we're waiting for just a couple more people. Nice. Exciting stuff. Okay. I think most everybody is here. So let's go ahead and get started. Hello, everyone. Thank you so much for joining us today. I'm really happy to have all of you in class. Being here and being present is really great first step towards, purchasing your first house, if that is a big goal for you this year. We have several people on this meeting with us. So as I said before, everybody is going to be left on mute for now. We just want to keep it, kind of simple and straightforward. So if you have any questions, comments, concerns, please leave those in the chat box. We do have a few Q&A sessions, short ones throughout the meeting if you had any, specific questions. And then when we get to the end, we hope you can stay with us until the end because we're going to open it up to a 30-minute open Q&A. And a lot of times some really great questions that can benefit all of us are going to come from that. So once again, if you have any questions, drop them in the chat box and we'll be sure to get to those. So let's get started. Break the ice. Let's, if you could tell me in the chat box where you guys are from, I would love to see where you guys are from. Where you're living at now. I'll get started first. I live in Fowlerville, which is in Livingston County. We have somebody in Howell. Awesome, right down the road. Great to have you, Jay, with us. Detroit. Okay, hi, Mary from Detroit. We have Logan and Whitmore Lake, Livonia. From Howell, lives in Jenison. Familiar with all those areas. We have a really wide range of people here, so that's really exciting stuff. Once again, I live in Fowlerville, small little farm community in the northwest corner of Livingston County. It is a small one street light kind of town, which I love, that small town USA feeling. So thank you so much for sharing that. I'm so excited to have all of you with me today. So let's jump right into everything. Coming here as a first-time home buyer, you might feel uninformed, a little bit stressed out, maybe intimidated. And I hear this a lot. I have no idea where I even need to start. Great news for you. That is totally normal. Most of the clients that come to me have little knowledge of or experience when it comes to buying a house. don't know where to start. And that's one of my absolute favorite parts of my job is being able to educate new buyers through the process, because I have been there, you guys. So my biggest goal for you on this webinar is to leave feeling confident, informed, excited, and with a clear path forward of the next steps, if that's a goal for you to purchase your new home in 2023. So a little bit about myself. My name is Kimberly Koss. I have been in residential real estate sales since 2018. Before that, right out of high school, I did get into leasing. I did apartment leasing at University of Michigan and Eastern Michigan University. So I was a leasing manager. I was an associate or an assistant manager at the different properties. So helping people find, their version of home has really been a big part of my life for a long time, and I absolutely enjoy it. Since going into residential real estate, I have closed multi-million dollars worth of real estate. I have had my hand in many, many transactions. One thing I'm really proud of is 50% of all my sales that I've had over the course of my career have been first-time home buyers. So I'm really proud of that. I am a part of the Tina Peterson team at Real Estate One. We are one of the top producing medium-sized teams, not only in Michigan, but in all of the United States. We really focus on doing ethical work and treating our clients the way we would want to be treated, and making sure you end up in the best possible situation. And I think that's really led to a lot of our success. We won countless awards. We won Best of Livingston County for the last 3 years. W4 Click on the Best real estate team. So we're really proud of the work that we do. I have been promoted to managing partner here. So I do a lot of the marketing and the advertising as well. So I have my hand in a lot of different things when it comes to real estate. A little bit about me personally. I am a homeowner. I've been through the process, obviously, not only as a professional, but on my own. As I said before, I do live in Livingston County. However, I have had the pleasure of living in Wayne County, Washtenaw, Oakland, and Livingston personally myself. I am a wife. I'm a mother. You can see my son and my husband there. We enjoy doing everything outside, outdoors adventure. You can see there's a really fun spot we hiked to. I'm also really into rescue dogs. That's a big thing that we focus here on our team. So there's my rescue pup, Lucy. And when I'm not with my family, I'm generally out showing houses and working in the market every day to get my clients, put in the best possible situation. So that's a little bit about myself. Hold on one second. What my clients have to say, Kim is the best. As a first-time home buyer, we were pretty clueless starting out. She was knowledgeable and educated us through the whole process. She stuck with us and fought for us each step of the way in an incredibly competitive market and in a pandemic. She is knowledgeable, responsive, and professional. We highly recommend. Another one, Kim is a subject matter expert. She took over when my first agent let me down. She helped me on short notice and was extremely professional. And then probably one of my most favorite tidbits I've ever got back as feedback, Kim was essential in us being able to end up in our best possible situation. And that is always, always, always a goal of mine, is to make sure my clients end up in the best possible situation for their circumstances. So let's jump right into it. First thing we're going to talk about the elephant in the room, you guys, interest rates. Unless you have been living under a rock for the last 6 months or so, I'm sure that you've heard about this and how it's affected the real estate market. You've probably heard it on TV, in the news, on social media. Your Uncle Jim probably talked about it during the holidays at the dinner table. And truth is, rates are up a little bit. Compared to what they have been in, the last year and the year before that, coming out of the pandemic. And that can be intimidating and scary, but truth is there are a lot of really excellent benefits that come to you as a buyer from having higher interest rates. And I know that sounds a little bit crazy right now, but stick with me because I'm going to show you what I mean here. Okay. So each week, my lender will send me basically a market snapshot, where we're at, where are the rates at. So can any of you guess what the interest rate came back in last week for a 30-year fixed rate mortgage? Drop it in the chat box. Let me see what you think. 5.255. Okay. Not bad guesses, you guys. They actually came back at, where are we at here? Almost 6.5. So it's a little bit higher than most people, 4.7. So a little bit higher than our guesses are, a little bit higher than they've been, previously, but they also have been higher. They have come down a little bit in the past few months, which is really good stuff. And we're starting to see the market pick back up again. Here we go. So the question is now a good time to buy? Why would higher interest rates entice me to want to go buy a house right now when I know I could have got it cheaper in the past, maybe in the future? So what we're seeing out there is we're expecting interest rates to rise through the middle part of 2023, and then probably plateau again a little bit. We're seeing in the market right now price reductions for sellers. We're seeing longer days on the market, and we're also seeing more inventory than we had really expected to see on the market. And when you put all that together, the higher interest rates usually means less people are in the market. And if we're seeing more inventory, that means it's turned from a competitive seller's market where sellers have full control. We kind of leveled out a little bit, and now it's a really great time to be a buyer because it's more shifted towards a buyer's market. And there's a lot of really great benefits that come with that. I don't know if any of you were in the market in the last year or the year before, and you really experienced what it meant to be a buyer, especially a first-time home buyer that might not have a lot of money to throw around. It was really, really terrible times. A lot of people got their heart broken time and time again. And what you had to do to get your offer accepted was just absolutely astronomical. So, like I said, I know that I say, higher interest rates, buy now, might sound a little bit crazy, but let me show you what that means in the real world, in the real estate market. So I want to play a fun little quick game of this first that. Would you rather have lower interest rates or the seller pay for your closing costs? Would you rather have lower interest rates or the seller offer to make repairs and improvements to the house before you close? Would you rather have lower interest rates or your offer being accepted below asking price, having less competition? In some circumstances, the seller can pay down your interest rate for a little bit of time, a year or two. So there are a lot of really great benefits. Like I said before, if you were in the market and you were a buyer, you literally had to give your firstborn child away to be able to get your offer accepted. There was no inspections that you could get accepted because people were waiving them. You had to go thousands and thousands of dollars over asking price, backing that with cash. There was so much that went into it that a lot of people really got frustrated. They got let down. So now that it's shifted, the interest rate's gone up, our competition is down a little bit. So now sellers have to do things to get their house sold. They have to do things to get the buyer in the door and get their offer accepted. So they're, we're seeing a lot more fly right now. So what happens? What happens if you decide to lock your rate in now? Really, we have three scenarios that can happen. First thing that can happen, rates go up and you refinance at the lower rate. You get the future lower rate without having to go up against the competition that's going to come with the rate going down. So that's a win. Rates stay the same and it's basically a wash. Or they go up and you're locked in at the previous lower rate and you didn't have to worry, you didn't wait it out and then lose out at the end. So that's a win too. So, a lot of people really focus on the interest rate, which I totally get. But it's kind of a moving part because it's very rare that you're going to see somebody that's going to get an interest rate and keep that for the duration of that 30-year loan. They're either going to refinance or move likely at some point during the process. So how do you go from where you are now to being a homeowner? So let's talk a little bit about the process. I am going to touch base on all this stuff pretty quickly because I could literally go on and on about this and we'd be here all night. So just a quick overview of, the steps that you need to take to become a first-time home buyer or a home buyer in general. Number one, obviously come to this class, learn everything you need to know. Step number two, and it's going to be vital, is getting your pre-approval letter and meeting with a mortgage lender. They're going to go over your qualifications. They're going to talk to you on the phone, and they're going to give you the golden ticket, which is your pre-approval letter, which shows to future sellers when you offer on their home, this is what you qualify for. This is how much money you can spend, and this is the type of financing that you can have. It gives you that stamp of approval that yes, they have looked at you. Yes, you're ready to go. And to be honest, you cannot even submit an offer and get it accepted without having a pre-approval letter or proof of funds if you're going cash in place. Once you have that, and you have your realtor in place and you have your lender, it's time to go out house hunting, the fun part. You're going to go out and start looking at houses. You're going to start narrowing down to where you want to be, what kind of house you want to have. You're going to search. You're going to find that amazing house that really fits what you're looking for. And once you find that, you are going to put an offer in and negotiate the terms. Your realtor is going to help you with all of that good stuff. And then, your offer has been accepted. So the next steps after that, you are going to get your home inspections done. If you are going to be in a condo or any place with an association, you're going to review all the documents that come with that. And we'll touch on that a little bit later because there is more that goes into that. You're going to get your appraisal done. Hopefully what you're paying for the house, your appraisal comes in above. So you walk in the door with equity. You're going to finalize your financing, which takes generally about 30 to 45 days. And then once you have gone through the process, you have finalized your financing, you have gotten your clear to close, you are going to have closing day. You're going to go in, hopefully get your keys. It's going to be an awesome thing. Maybe you take a fun picture with one of those awesome props, and then you move in. And I know it sounds super easy, and I made that sound really simple. Like I said, I could go on for days, but overall, those are the main processes, the steps that you do need to take to be able to get your offer accepted and become a homeowner. Okay, with that, we're going to jump in right into mistake number one we see first-time home buyers making. And I am going to bring on my lender. I want to introduce to you guys Joe Galvez. Joe loves helping families find the perfect mortgage. He walks each of his clients through the process from approval to closing to keep the experience as stress-free as possible. A little snippet from one of his past clients. Joe is very efficient, works around the clock, and is always there to answer questions when needed. No waiting around for business hours. Great rates and costs too. My experience working with Joe helped me close on my own personal house. He has helped my clients. He is just the bomb, to be honest. He's always there to help you through. He really takes time to understand your financial situation to really be able to analyze that and determine which way forward, which lending type is going to be best for you. So I'm going to turn it over to Joe. Hi, Joe. How are you?
I'm doing well. How are you?
Good. Thanks for being on with us today.
Thank
So
you for letting me join.
our first mistake we see is ignoring first-time home buyers, incentive programs, and grants. So that is Joe's thing. So take it away.
Okay. Thank you very much. I'm happy to be here. If you guys, as we go along, if you guys have any questions, please make sure you type it in the box. So if we don't address it through the presentation, we can make sure that we get to it at the very end. I do want to take a step back really quick though, and regarding the interest rates that you guys put on here, I want to make sure that we're very, very clear on the graph that Kim showed. That is the national average. So that's not my average interest rates or specific lenders. That is the Fannie Mae national interest rates for the entire country last week. Okay. That's not necessarily where they are today, but just want to give you a heads up. They're a little bit lower today.
Oh, okay.
So I locked 3 loans this week that were 5.875%.
Awesome.
So they're getting closer to where we want them to be, but that's where they are. So I just wanted to make sure that that was clear on the national average. Please go to the next slide. So what can a first-time home buyer mortgage program offer you? There's no single program that's perfect for every single person. So my job is to sit down with each and every one of you and have a conversation. It's more than getting your application. It's more than getting your documents. It's about finding what your financial goals are and making sure that I give you all the options that are available to me so that you can make the decision that's best for you and your family. But there's a bunch of different options that are available to you. First-time home buyer loans can mean lower mortgage payments. I'm sorry, lower down payments, lower mortgage insurance. There's grant programs available. So if we're a little short on cash, we might have a program available that can help you. Down payment assistance and also lower interest rates. So that leads into the lower mortgage payments. So these are all things that a first-time home buyer loan can help you with. You go to the next slide.
Oh, I'm going. Hold on. Sorry. Why are we having struggles here? All right.
Okay. Probably this is probably tied for number one for the loans that I write for first-time home buyers programs, but it's a MSHDA down payment assistance. This is a grant program that's funded by the state of Michigan. So Michigan State Housing Development Authority. Depending on location, you can get up to $10,000 in government grant assistance. The borrower yourself would be required to put 1% down, and then the rest of the money for the down payment and the rest of the money for the closing cost can come from the grants. What's nice about this is that the mortgage insurance is lower on this program. The interest rate is fixed. Also, the costs are fixed. The state of Michigan, doesn't matter which lender you go through. The state of Michigan is, if you want a MSHDA loan, here's the interest rate and here's the cost that the lender can charge you. And it can be matched with almost any loan program. You can match this loan with a conventional, with an FHA, with a USDA, with a VA loan. So it's a good program that allows you to get a grant. Really, one thing we do have to worry about with this one, and it can be a little bit harder. Some of the first-time homebuyer programs can be a little bit harder because they require things such as a higher than average credit score. They're going to require a lower than average debt to income ratio. In this particular case, everyone living in the home that is over 18, excuse me, that is over 18, even if they're on the mortgage or not, they still have to credit qualify for the program. Okay. Same thing. There's also a cap on income. Everyone over 18, their income has to be counted, and if you are over the cap, then we may not qualify for the mortgage. So these are all things. Every location, every zip code, every address is a little bit different, but we'll definitely be able to help you with that. And the good thing is the grant is up to $10,000. It is repayable. It does have to be repaid, but it is non-interest bearing. So as long as you hold this mortgage, you don't have to pay it back, and there is no interest. So if you pay the loan off at 30 years, that's when you would pay it. If you refinance or you sell the house, you would have to pay it back as well. As far as the income cap goes, it's fairly high. They just raised it last year, but each location is different. So the income cap, and let's say in Detroit, is going to be different than the one in Holly or in Howell. They're right around $98,000 though, for the most part.
Okay.
Is there anything you wanted me to add for MSHDA, Kim?
Nope, I think that's mostly it.
Okay.
There's a class you have to take if you want to use these funds. There's a class you have to take.
A lot of these programs that I'm going to be talking about, MSHDA in particular, and the conventional loan programs, they're going to require a first-time home buyer class that everybody on the mortgage is going to have to take. It's very, very easy. It's free. It can be done online, and depending on how fast you are, you can do it in 20 minutes to a half hour. So it's not something that is out of the way or is very difficult to access. So,
Perfect.
yeah.
Perfect.
Thank you. Regarding mortgages, like I said, MSHDA was a program that can be assigned to any of these mortgages. We're going to talk about conventional loans, FHA loans, and USDA loans. USDA is also rural development. You may hear me say those interchangeably. So when most people say I want a first-time home buyer loan, whether they realize it or not, this conventional loan is a home ready, home possible product. So whether we're doing Fannie or Freddie, but this is the original first-time home buyer loan. it allows down payments as low as 3% with no penalty on your end. It does, if you qualify for it, it does offer you lower than average interest rates on the market. Your mortgage insurance will be lower than the market. First-time homebuyer education is required, and the seller can pay concessions up to this, 3% seller concessions on this program. Okay, still the same thing. It requires a little bit higher of a credit score, a little bit lower of a debt to income ratio. There is an income cap on this one. It's not as generous as the MISHDA program. However, in each address is very, very specific. So this, where MISHDA is more down, the income cap is down to the city. This is actually down to the address. So it could vary greatly from city to city, address to address. But this is probably the number one program that I use, especially over the last 2 years where no one was accepting any offers from FHA loans or VA loans. Really, they were only accepting cash or conventional loans. So this was my go-to if I could get someone qualified for it.
Hey, Joe, do you see that question? What's a higher credit score? 700? What do you mean when you say that?
So that's a good question. So the credit score system is tiered. The good thing with, and I want to address a huge misconception with credit scores, if I can at this time, since you asked the question.
Yeah,
So
go ahead.
if you went to your bank today, let's say you I bank at Genesis Credit Union, so I'm gonna say that. Let's say I walked into Genesis and I said, I want a credit score for a car, for my credit score for a car loan, a personal loan, a credit card, and for a mortgage. I'm gonna walk out of there with 4 different credit scores. And that's because when you're talking about a car or a personal loan, it's not regulated in any way. The bank or the lender can use whichever reporting agency they want. They can use the highest, they can use the lowest. There's no requirements whatsoever. However, for a mortgage, all mortgage lenders, the credit score is actually federally regulated. All mortgage lenders have to pull all three reporting agencies, Experian, TransUnion, and Equifax, and we're required to use the middle score. Okay, so that's a good thing. Here's the other misconception too, and depending on who the lender is that you're working with, a lot of the large national lenders that I've worked with in the past as well, they train their bankers, never ever get your credit pulled because your score is going to drop. Well, you can Google everything I just told you. Because they're federally regulated, there's no hits or penalty for getting your mortgage credit score pulled for a mortgage, only for a mortgage. Okay, so you can have your credit score pulled 100 times from a lender, all these lenders, and you're not going to see a points hit for you. Okay, so that's good news. Credit scores, it's a tiered system. So the highest credit score for a mortgage is 740, meaning anything over 740 or higher is considered perfect. So whether you get a 740 or an 820, it's the same. It's the best interest rates available. And then it's tiered for every 20 after that. So from 720 to 739 is a second tier. From 700 to 719 is a third tier, so on and so forth. Each one of those tiers is a little bit lower of an interest rate. As we know, mortgages are risk-based. The more risk the loan is, the higher the interest rates are. Hopefully that answers the question.
Okay.
I'm ready. FHA loans. FHA loans, we use these for a lot of first-time home buyers. They're very, very good loans. These are government-backed loans. It's a very low down payment. The first home that I purchased, I don't want to date myself, but probably 20 years or so ago, was an FHA loan because that was the lowest down payment program available. 3.5% down. Easier financing than you would have with a conventional loan. It allows for a lower credit score. It allows for a higher debt to income ratio. So basically meaning you could borrow more money typically with an FHA loan than you would with a conventional loan. And the interest rates in the typical market are lower than what you would see for a conventional loan. And the seller can pay for a little bit more of your closing costs with this loan than they could with a conventional loan. FHA loans are really good for first-time home buyers because they're essentially designed for people that may have weak credit or poor credit, especially first-time home buyers. They may not have bad credit. They may not have weak credit. They just may have a lack of credit or not enough credit history. So that is where the FHA loan comes in. It's very, very good. It can help a lot of people that otherwise wouldn't be able to qualify. It can get you into a home. Yeah.
Yes. And we can finally get them accepted again, which is the best
Yeah,
part.
that's the good thing. I think probably in the last 2 years, realistically, I've probably had a dozen FHA loans. I closed in the last 2 years about 200 loans, and about 12 of those were FHA. Less were VA, but the majority of them were conventional because that's all people were accepting. Now businesses start, because the rates have dropped a little bit. A lot of my buyers are starting to get back in the market. Half my pipeline now is FHA. FHA accepted offer loans, which is unheard of, so it's a good time right now for FHA. USDA rural development. This is most people, when they hear this, they think of farmland or a lot of acreage or anything like something like that. That couldn't be further from the truth. It's a very good program. It's very similar to FHA, where it's a government-backed program. It's backed, instead of the Federal Housing Administration, it's backed by the U.S. Department of Agriculture. However, it's not for farmland. It's not for high acreage, and it is, again, address specific. This, where MISHDA is available in every single home in Michigan, whether you're in the upper or the lower peninsula, a conventional loan, FHA. Every single home could potentially qualify for any one of those programs. The USDA only allows lending in specific areas, and it's based on address. So, but the good thing about this program is there is no down payment. Okay. There is no mortgage insurance on this product. So we don't have to put any money down. We don't have to pay mortgage insurance. We do have lower mortgage rates that are very similar to what the FHA is. Okay. Now, one thing I do want to mention, and I forgot to mention this with FHA, both FHA and USDA, since they are backed by the federal government, they are self-financing. The only way they can self-finance themselves is if they include a fee into the mortgage. And both of them are pretty standard. It's a percentage of the loan amount. And we can finance that, but it's an upfront mortgage insurance premium is what the FHA calls it. And we finance that. It's added to your loan amount. And with the USDA, while there is no quote unquote mortgage insurance, there is a monthly tax that they put onto the loan, but it's still much lower than what your mortgage insurance would be. Okay. But again, and the same thing with this one too, though, it's area specific. Everyone on the house, whether they're at the 18 or older, if they have a job, there's an income cap. Everyone in the house is income, unless they're a full-time student. Their income goes towards that income cap. And if we make too much money, whether on the loan or not, we won't qualify. Then each of these loans is designed to help someone specific. Okay. So that's where we sit down, we have a conversation with you, find out what your goals are, find out what you're capable of. And then we sit down and we pick the best program for you, and I give you all your options, if that makes sense. The cap on the USDA varies widely throughout the state. So it's based on the exact address. Give me the address of the house that you want, and I would look it up on the USDA website, and they'll tell you. Oh, the cap for the USDA loan. I'm sorry, I misunderstood the question. I believe it's around $275,000, $280,000. It could be a little bit lower. I know MISHDA's cap is $225,400. So usually these programs have a little bit lower of a cap. There's a cap on the conventional loan, but it's $715,000. There's a cap on the FHA, but that's $450,000 plus. So definitely a first-time home buyer would be able to find a home within that range. This is an example. This next slide is an example of FHA versus conventional. This isn't to show one is better than the other. Each one has their own specific clients, their own specific benefits. It could even come down to the house that you're buying. Not every house that will pass a conventional appraisal is going to pass an FHA appraisal. FHA, VA, rural development loans, since they're government backed, they're more strict on a lot of the processes when it comes to the actual physical appraisal of the house. Doesn't mean it's going to appraise for less money, but they expect the house to be in a better condition.
Can I add one thing in, Joe?
Yeah.
What you should take away from this is not every house qualifies for every single type of financing. Like you said, the FHA, the VA, if you're going that way, or the rural development, because they're government backed, they ask for more and they do basically a secondary inspection during your appraisal. And if there are repairs and stuff that come up, they have to be done before the closing can happen. So that's another step into FHA, VA, USDA that conventional does not require.
Yes. And a lot of the times there's, you know, houses that would have no problem passing a conventional loan. The appraiser on an FHA loan or a rural development loan, you'll have a list of stuff that needs to be fixed prior to closing. So that's where in this shopping in this market now, where competition is down, it's more of a buyer's market. This is way advantageous for you because I have a lot of addendums after the fact, after the inspection, after the appraisal, that sellers are agreeing to that they were not agreeing to. It was either you take the house as is or we'll take the next offer. So, but this is a quick comparison between the two, the 3.5 versus the 3% down payment, minimum credit score available between the 580 and the 640 for the conventional loan. Now, I want to make sure that I'm clear. When I'm speaking of conventional, I'm speaking specifically of the Home Ready, Home Possible products, which are the true first-time home buyer loans. You can get a normal 5% down conventional loan with a 620 credit score if you can qualify. It's very, very hard now to get it to qualify with at a 620 credit score, but they allow for it. Will allow you for a higher debt to income ratio as well. But the interest rates aren't as good. The mortgage insurance is going to be a little bit higher, and there's no income cap. So again, that's where we kind of sit down and find the right product for you. You're looking at the debt to income ratio. The FHA loan will allow you to borrow more. Here's the loan limits for both the 420, 680 versus the 715. No income limit on FHA. You can make as much money as you want. It doesn't matter how many people are living in the house. However, on a normal conventional loan, it's the same thing. There's no income cap. But on the first-time homebuyer programs, they do cap the income. Okay. And then your minimum out-of-pocket contribution, which is the same as your down payment, 3.5 versus 3%. Okay. So what can you use and what can't you use for down payment and closing costs? So this is a very good one, and it can often lead to a lot of confusion. Definitely money in the bank that's been sitting there that is verifiable. I'm going to go back to the original housing crash that happened 12, 14 years ago in the introduction of the Patriot Act. A lot of people think that a lot of people kind of hate lenders at this point and underwriters because they're like, you're asking for, do you want my blood type? Do you want all this stuff? And believe it or not, we're not doing it to be difficult. Some lenders have overlays that they require a little bit more than what the regulatory agencies require. John Adams Mortgage, we don't. We require the bare minimum that the government requires. But going back to the original housing crash 12, 14 years ago, when they did the investigations, they found out that people were laundering money, buying and selling houses. People were funneling money to terrorist organizations by buying and selling houses. So because of that, they kind of put a lockdown on the assets. So money sitting in the bank that's verifiable that you've paid taxes on, 100% you can do this. 401k, retirement programs, you can pull money out of an investment account, anything like that that we can track and that's been managed and has a history and has been seasoned in a bank account, we can use it. Stock bonds, definitely. Now, one thing you can't do is you can't borrow money. You can't gain debt to borrow money. So you can't take a loan out of the bank for your down payment. You can't charge your down payment on a credit card. About the only thing you can actually put on a credit card for a mortgage is the cost of the appraisal, and that's it. Okay. Undocumented cash. This is always the big one. You can't take, you got $10,000 under the mattress in your bed or a safety deposit box. You cannot take that money out and use it to purchase a home. Again, all money has to be documented. It has to be verified. Government has to know you've paid taxes on it. So if any of you guys have mattress money or stuff in a safety deposit box and you want to buy a house in the next 3 or 4 months or in the spring, my recommendation to you is put that money in a bank right now. Because by the time you want to use it, if it's been in the bank long enough, we can use it at that point. One of the documents that we require are 2 months worth of assets accounts. Any money that's in that bank within that 2 months, I can use. any cash deposits, anything like that cannot be used. And so if you have money, you want to use it, put it in the bank now. You can also receive, one thing that's not on here is you can, oh, it is on here, forgive me. Gift funds can be used, and this is a very, very popular way, especially with first-time home buyers. They've recently opened up who can gift you money. It's a pretty wide array of people, but let's, for right now, just for ease and making it simple, life partners, your spouse, or an immediate family member. Step parents, step grandparents, step brothers and sisters are also included in your immediate family. You can definitely get gifts from them, but again, just like your money has to be verified in an account, the money gifted to you has to be verified in an account. So whoever gifts the money will have to provide 2 months of bank statements. They'll have to sign a gift letter stating that the money is not to be repaid. And we can talk about that during qualifications, so, and get a little bit more detail on that. How to choose the best lender. Wow, I could go on all day for this. And I'm sure Kim will add more to it. I think some of it doesn't mean much coming from me because I'm a lender, and I'm always going to tell you to go to John Adams. I'm always going to tell you to go to me. But I think the importance of what I'm going to say was especially illustrated in the last 2 years. Large national lenders are a no-no. They're not held accountable to anything. A lot of them will send you an approval letter without getting your credit pulled, without sending documents. They will approve you. And I know, Kim, you and I, we've won, and a lot of my realtors that I work with, we've won a lot of deals just for the simple fact that the client was using a local lender that was familiar with the area, was familiar with the property, was familiar with the rules and the regulations. That's my big thing is work with somebody that is local, whether it's me or whoever else. And if it's a large national lender, just because they're headquartered in Michigan doesn't mean they're local.
Right.
But the big thing, and one of the things too that I can't stress enough, and a lot of this goes the same thing with your realtor, choose somebody who you are comfortable with. When I go through the process with my clients, a lot of what I do is education. I want you to feel comfortable. I want you to feel confident that you have chosen the best team to represent you out there. Because this can be very, very stressful. Me personally, I would rather get married again and have another kid again as opposed to buying a house. I mean, so every house that I bought though was precedented by selling a house. So that adds to the stress. But you need to make sure that you're comfortable and you're confident with your team. Because we are, especially over the last 2 years, Kim and I, we bled on the field with our clients trying to get up. Our clients may have been 1 of 10 or 1 of 20 offers in on the table. And how am I going to help you, your client, differentiate that, your offer from all the others? How is Kim going to be able to help you? So that's really what you want. You want someone that's going to take the time with you, that's going to educate you. Up here, it says vague terms. Definitely. Anyone that quotes you an interest rate on the phone, realistically, without getting your credit, without seeing your qualifications, they're telling you what you want to hear so that you call them back. And then when you do call them back and they say, okay, that interest rate is 6%, they'll say, oh, but you told me 5.25% over the phone. They're going to just say, oh, that's because the interest rates have risen, right? There's so many variables that go into telling you what your interest rate would be. It's affected by your credit score. It's affected by your down payment. It's affected by your debt to income ratio. It's affected by the loan amount. Yeah. All those things affect the credit score. So how can anybody that just over a 30-second conversation quote you an interest rate?
I'm going to throw this in before we get off here with Joe. It's a life motto. If it's too good to be true, guys, it probably is. So make sure if you're getting multiple quotes from multiple lenders, you're comparing them apples to apples, because most of the time, if something is like really, really different or really, really low rate, there's probably a reason why.
Yeah. And I'm gonna do one more thing. And this is probably, if you take anything away from this, I'm not saying not to shop. I want you to shop. I want you to be comfortable knowing that you have the best lender available to you. But I want you to understand, in this market with interest rates are high, lenders are going out of business left and right. the deception is becoming a lot more apparent what lenders are doing to their clients. And I know what's going on out there because I was trained by some of these companies. I started working for large national lenders. Now I'm working for a small family-owned lender, John Adams Mortgage, and there's a reason why. The lender can only control 3 numbers on your loan estimate. So if you are comparing numbers, if you're shopping lenders, there's only 3 numbers you need to know. The interest rate, what the cost of the interest rate is the lender charging me points? Are they charging me a premium for a lower interest rate and how much that premium is? Or is the lender giving me lender credits, meaning I'm crediting you money towards your closing costs? And then the lender fee. Those are the only 3 numbers, because at the end of the day, you don't want to look at your loan amount's not going to change. The insurance isn't going to change. The taxes aren't going to change. It doesn't matter which lender you use. All those things are going to be identical. So you never look at the cash to close number, because that number can very easily be misrepresented.
Absolutely.
So those are the only, if you take away one thing from what I say today, those are the 3 things that you look at: interest rate, cost of the interest rate, and lender fees, nothing else when you're comparing lenders.
Yeah. Okay, so let's open it up. Do any of you have questions directly for Joe related to financing or anything we've talked about so far? We're going to take a quick 5 minutes. So yeah, drop your questions in the chat box and we'll be sure to get right to those. I do have a question for you, Joe. Can you pair a 0% down loan, like a USDA product, with the first-time homebuyer MSHA down payment assistance? How does that work?
Yes, you can. You can pair MSHA with almost anything out there, but MSHA does have even though USDA is 1% down or is 0% down, MSHA has a 1% down requirement. So we can definitely pair the grant with a USDA loan, but you'll be responsible for at least 1% of the down payment. So if you purchased a $200,000 home, you would have to put $2,000 down.
Okay, great. Any questions from anybody before we move on? We talk about the next couple mistakes we're going to see first-time home buyers making that can cost them a lot of money in the long run. No, that's okay. Quiet crowd. Okay, so mistake number 2. Let's talk about it. We kind of touched on it with Joe, but not getting a pre-approval letter before you go out shopping. You guys, you cannot put an offer in on a house if you do not have a pre-approval letter. So it might not cost you money that you didn't get it, but it's going to cost you a lot of heartbreak if you go out there, you're looking for houses, you find the one that you love and you can't offer on it because you didn't take that first step to get your pre-approval letter. And now you've missed out and you're heartbroken because you did find that perfect house. So it's always going to be your very first step when you are serious about going out there and looking at houses to get your pre-approval letter first, or it will break your heart. So I'm going to take back over a little bit about loan pre-qualifications. The really 3 big things that lenders look at: your credit, your income, your assets. And I know Joe touched a little bit on that, so we don't have to really go back in detail from that. But what your pre-approval letter is going to do, it's going to determine what house you qualify for. Once again, every type of loan does not go with every single type of house. It's going to increase your bargaining power when you're talking to your sellers because they know that you have been vetted. They know that your lender has looked at all of your financial portfolio and that you're ready to go. It's also going to help you estimate your monthly payments and your total investments so that you know before you go in, what you can, not necessarily what you can afford, but what you're comfortable paying per month. And it's also going to identify which loan products are going to fulfill your needs best in your personal life. So a little bit of do's and don'ts during the mortgage process. It takes about 30 to 45 days for a mortgage to process through from the time your offer is accepted until the closing. So a couple things that you should do if you are going through the loan process, call us if you have any questions. Don't change, anything major on your credit portfolio, including paying money off on your debts, unless you talk to your lender first. Keep your credit score is normal and as close to what it was when they pulled your credit originally. Don't make any large purchases. We know a lot of times, we get our clients their offers accepted. They're super excited. We've been through most of the process. They're out there, they want to buy a new couch for their living room. They're super excited. They go to, let's call it Gardner White. They see this living room set that is to die for. And of course, Gardner White is going to offer you, some really great financing incentives. I've seen people kill their deals because they charge something that they shouldn't have. And now their debt to income ratio is skewed, not what it was when they got pre-qualified, and it will kill your deal. That goes same too with appliances. So it's, really important that if you need to buy those things, number one, it might not always be a deal killer, but just reach out and make sure that if you need to change anything major, that you are like running that by your realtor and your lender first. So that way there's no surprises down the road. I had a client of mine, finance a $50,000 truck 2 days before closing. And when they reran that credit, guess what? Killed the deal because they couldn't afford it anymore. Mistake number 3, and Joe kind of touched on this a little bit, but using a big bank or a national lender or an online lender, especially, that can cost you a lot of money. It's averaged about $5,000 to $40,000 depending on who you're working with, and here's why. I went too far, you guys. Sorry. Sorry. Okay. Most banks charge higher fees. They can have higher interest rates. Banker's hours. One of my favorite thing about Joe is we can get a hold of him on the weekend if we need to, or later at night. Most lenders don't do that. And, people that work, when do they look at houses? At night and on the weekends. And if you see a house you love and you need to talk to your lender, you need to be able to get in touch with them. So that's one of my favorite things about them. And working with a smaller, more intimate mortgage company or credit union is super beneficial, because when you go to these larger places, you just become a number in their pipeline of thousands and thousands of people. You don't get that personal one-on-one experience that you need, especially as a first-time home buyer. And I can't stress that enough. I'm not going to name any names. You guys, a lot of you probably know who I'm talking about.
When you're done, I'd like to add to this.
Okay. You can get shuffled around, and it can be super frustrating when you're trying to reach out, get the information you need in a timely manner. And, you might get the person you need to talk to, but you might not. So it's my recommendation, if you're going to look at banks, maybe check out a local credit union or a smaller mortgage broker, or reach out to your realtor. Realtors generally work with really great mortgage lenders. So always be open to asking for recommendations as well. Go ahead, Joe.
I want you to understand a few things when it comes to the large national lenders, how they get their business. 100% it's based off of buying leads and marketing. They pay for Super Bowl commercials, and they buy literally $10 million a month of leads from realtor.com and from Zillow, and they'll call you 50 million times. Or they got to pay for the Cleveland Cavaliers salary and stuff like that. That money is passed along to you. So all that money that they spend, that marketing, all those clever advertising gets passed along to you. You're not saving any money. Actually, you're spending thousands more, usually by going with a large national lender, because they have to absorb that cost somewhere. Banks and credit unions are definitely better than large banks, but depository institutions, they do not write mortgages because they want to. They do it because they have to. They're not designed to do mortgages. It's an afterthought. They only do them because people that get their car loans there, that have savings and checkings accounts there, they ask for a one-stop shop. So they do it kind of like they twist their arm. Wells Fargo, if you listen to Wells Fargo in the last few days, no longer doing this. And they were one of the largest mortgage lenders in the country. And they're completely switching their shift on mortgage lending. And you can Google that, find that in Yahoo or Google. But that's one of the big reasons why. And then, like Kim said, you get lost. Banker's hours, who are you going to call? You're looking at that house before you get under contractual obligation, before you put the offer in. Sunday, while you're looking at that house, who are you going to call? You got to wait till Monday, Tuesday, and in the meantime, they've already got a bunch of other offers coming underneath you. So yeah. I'm done. Thank you.
Yeah. So, okay. Mistake number 4 is going to be buying directly from a new construction builder, you guys. if you're looking at new construction, the perks of having a new house built the way you want it really speaks to you. And you're thinking about going into one of these communities where they, throw up all the same houses and they have the pretty model that you can walk through. I want you to understand that the person that works there that's going to greet you at the door is a highly skilled and trained sales professional that is there on behalf of the seller who is the builder. It costs absolutely no extra money to bring your own realtor with you. And we are trained and in the market. I've done 2 new constructions literally in the last week where I represented my buyer to make sure they got everything that they should. Everything was included that they should. The warranties were in place. So if you go right into the office and you just work with whoever and you're not worried about it, they might be a nice person. Like I said, they're highly skilled. It can cost you a lot of money because they are not there to have your best interests in mind. We can help you make the best decisions financially as you build, help you go through upgrades, improvements that you can have. Like I said, we are knowledgeable as to how this process works. We know about the warranties, we know all the good stuff that goes in the background, because a lot of people go in and they go in cold turkey. You probably haven't done that before. And it costs you absolutely they're there. They have their sales rep there to represent them. It costs you no money to bring your own representation to make sure you are set up for success as well. So if you are ever going to a new construction company, you need to have your realtor come with you. So just reach out. Hey, I'm really interested in this community. Can you reach out, give me more information, set up an appointment, and we can handle that on your behalf. Absolutely no problem. Okay, next. This is so huge, you guys. Skipping the home inspection. Luckily, thank the Lord, we are coming back to a place where we can get offers accepted that had inspections in them again. The last year or two, that's one of the biggest things that buyers in the market were exiting, because that's how you had to get your offer accepted. And it's just so risky. You have your own private inspector come in, they go through the house to make sure everything is as it seems. Skipping that can cost you upwards easily of $20,000. God forbid you find the roof is bad, or there's mold, or the foundation isn't as it should be. Those are all huge things that, especially as first time home buyers, if you're coming in and you don't have a lot of cash and you skip the inspection, you also lose your negotiation power, because during your inspection period, if you find these things that are major deal breakers for you, or major talking points that you're like, I got to get this fixed, or I'm not going to be able to move forward with this house, you can renegotiate at that point. So you never want to skip a home inspection. It's a couple $100. It's probably, if you're going to buy a house, some of the best money you're going to spend to really give you that peace of mind that as you come in the door to your new house, you're so excited that everything is as it should be. And there's also a lot of odorless things you can't see, carbon monoxide leaks, mold. Radon is a really big one in the state of Michigan. Radon is the second, besides smoking, largest leader to lung cancer, and it just comes up through the ground. So these are all things that your home inspector is trained to look for and inspect for, to make sure that your house, when you buy it and you make the biggest investment probably of your life at this point, is in sound, safe condition for you and your family. And then make mistake number 6 that can cost you a good amount of money and can be really dangerous, you guys. If you're going to buy a condo or a home that is within an association, skipping the documents, the condo review documents. So that can cost you, really any amount. So when you buy a condo, or like I said, something with an association, there are community bylaws that you need to review in advance. Probably a lot of you know this, but they can have rules, restrictions on a lot of things, including how many people can live there, what type of pets you can have. The really crazy ones I've seen, they control what days you can have your garbage cans out, how long you can have your garage doors open, which some people like that because it controls your community. But other people really, don't like that. I've had deals killed because they didn't review the condo documents in advance and found out they couldn't have their dog there. A lot of people that are new first-time home buyers buy condos because you don't have to do all the maintenance, things like that. But they want to rent it out later in life. Can you rent it if that's your plan? Are you able to do that before you buy the house on the thought process that that's what you're going to do? It can cost you a lot of money. Let's say, in condo associations, because they're connected, a lot of times the association will cover, exterior repairs, they'll cover the roof, anything that goes condo to condo. So plumbing, driveways, things like that. God forbid you had a plumbing leak and you spent a bunch of money to have somebody out there when your association would have covered that. That's money out of your pocket that they might reimburse you for, but it maybe not. Hopefully you didn't just put a fence up in your community and spend a bunch of money on a nice fence when they come and knock on your door and say, oh, sorry, you can't have that. You have to take it down. So it's really, really important to review these documents in full. It's going to be the bylaws, and it's going to be like a 40-page document. Usually it can be really overwhelming when you look at it, but you want to make sure you're taking away those really important key factors. So those are big mistakes. Those are overviews of our mortgage process, of our, getting the house under contract, going through the whole financing, everything like that. So I hope now, how are you feeling now? I hope you're feeling more excited, confident, definitely more informed. Tell me one thing that you learned today. What's something that you learned today that you did not know before you came here? I would love to hear about it. Drop it in the chat box. Anybody got anything they learned today? Not, that's okay. I get it. You want to be quiet too. That's fine.
Or even for next time we do this, what would you guys like us to spend more time on or less time on? What was helpful? What was good? What wasn't?
No, that's okay. We'll talk more at the end. So loved it. Thank you, Jay. That's awesome. Didn't know there were different loans. See, yep, multiple different kind of loans you can have, personalized to your specific financial portfolio. So my key takeaways for you guys. I hope you understand now that buying a home doesn't have to be as stressful and overwhelming when you have a really great realtor and lender team on your side. Yeah, people on the loan can definitely affect the loan approval for sure. It's obviously a stressful process and it can be, but having the right team on your side can really diminish that. It is still a great time to buy, even though rates might be a little bit higher. You do not have to put 20% down on a house unless you want to, and you've prepared for that. That shouldn't be the stopping thing. I've talked to so many people over my time that literally have been saving for years and years thinking they had to put 20% down when really we showed you there's so many different programs out there that really cater to different financial situations. If this is so important, I want you to take this away. Who you work with matters. Everybody knows a realtor. Everybody knows somebody that does mortgages. Everybody knows somebody. But everybody doesn't know somebody that is excellent, that's going to do absolutely top tier work for you, that works in the market every single day, and knows really how to set you up for success. And then there's also a ton of assistance out there for buying your first house and making that as obtainable as possible for you. We have lower down payments. There's programs where you don't have to put a down payment at all. You can get assistance. I love to see it. I love that they make these programs obtainable for many, many more people. Bats. Yes, I have seen a house, you guys. I have so many bats in it. So that's why you get an inspection, because that stuff is crazy. Okay, so your next steps. If you enjoyed being here with us today, you enjoyed the content that we provided to you, obviously it's more of an overview. We can't unfortunately go into major detail on every single person's personal financial situation and what your needs are, or we would literally be here forever. So your next steps, if you are ready to go, you want to have a more personal one-on-one conversation with either Joe or myself or both of us. Your next step is going to be booking a phone call. So this is about a 30-minute, 15, 20, 30-minute phone call, depending on the kind of questions you have. And we're just going to go over your personal situation, what's going to be best for you, and come up with a roadmap that's going to set you up for success. It's going to set you up for success for the future. So that way, when you go out there, you are ready to go. So when you click on that link, it's just going to take you to my calendar. So you can see when I'm available. There's a few days. We usually don't go out more than a week in advance because I am a realtor and my schedule changes every single day. But I would love to talk to any of you and help you really guide you more personally in the future. I'm not here to be a pushy salesperson. That is not my thing. I don't like to be treated that way. I'm here to educate you, to provide value, to answer any questions you may have. Like I said, my goal is to set you up for success. That way you feel super confident when you decide to jump in and start house hunting. And if you're not ready for that, you guys, that's okay too. If you're just getting started, this is your very first starting point. You're not ready to reach out and have a call. That's okay too, you guys. I would still absolutely love to connect with every single one of you. If you scan this QR code, you guys, that's going to take you right to my digital business card. And when you do that you can save my contact information for the future. You can read my reviews. You can go to my website. You can also follow me on social media. You guys, I do a ton of stuff on social media. TikTok has been my new big one, and I make a ton of content that is specifically geared towards first-time home buyers and providing you that information that you're going to need in a fun and kind of weird way. So I'd love to connect with every single one of you. Like I said, if you're not ready yet, that is absolutely okay.
And guys, I want to let you know, she's amazing on TikTok. If enough people ask, she's going to do that Wednesday dance for her next one.
I'm not gonna do that. I don't do the dances, you guys. I'm more about providing value, but if you really wanted me to, I guess.
The Adams family dance, the Adams family, that one, that's
So if you're in the area, just some fun stuff, upcoming events. I'm going to be at the Here Comes the Bride bridal show next Sunday from 1 to 4 o'clock. We have free tickets to give away. So if any of you are newly engaged, or if you have friends getting married, if you just want to try some cake samples, I have free tickets to give away. So let me know if you would like any of those. We're going to have a booth set up and we would absolutely love to meet you guys. But that's what we have today. So thank you so much for joining us and staying all the way till the end. We're going to open it up for Q&A. So if you have any questions at all, drop them in the chat box. We're going to leave this open for about 30 minutes. So don't hesitate. No question is a dumb question, you guys. We are all starting somewhere when we're here to learn together. So I think that Miss Mary had a question.
Yeah, no, I'd love to take this because it deals mostly with the mortgage end.
Let me read it out loud. Hold on. Mary's question was, what is the average timeline from reaching out to a lender for pre-approval to having keys in your hand?
So as far as the approval process goes, that can be, it all depends on you. It can be less than 24 hours. So a lot of people, if you fill out the application and some of your documents that morning, I can have you an approval depending on my schedule, definitely that day. But even late morning, early afternoon, you could have it. So that's not a hard part. Now you could be looking for a house for a while, right? You could go out and, I get you approved on Friday, you put an offer in on Sunday, it gets accepted on Monday, or you could be looking
That's
for
a perfect world. It doesn't always work that
way. Or you could be looking for months. So the actual process, I think you're talking about, we're going to exclude how long it takes for you to get an accepted offer. So literally you're looking at less than 30 days for the entire process from approval till closing. Now, some of the programs take a little bit longer than others to close, stuff like the MISHDA and the USDA. We have our own set of underwriters when we look at the file, but then we have to send it back to MISHDA or USDA for their underwriters to review. And depending on how long their queue is, it could be a couple days or it could be a couple weeks before they're able to look at it. So stuff like MISHDA, especially USDA takes longer. That could be up to 60, 90 days. MISHDA, I'm very good at closing them within 30 days, but let's just say 45 days. But the average FHA loan or convention loan is definitely less than 30 days.
Yeah. Yeah, I would say my response to that would be 30 to 45 days, depending on your financing. But the kicker there is, like he said before, you could be, I've had clients go out, look at literally one house, put an offer in, it's accepted, they close in 30 days. I've had clients that I worked with for literally 2 years before they were able to find the perfect house and get it under contract. So really what you're looking for, the price range you're in, where you're looking, how picky you want to be, that's totally fine. It's absolutely what you want to do. But, that's going to control a lot as to how long it takes. We had a question come in. Would you guys recommend having a certain amount of money in the bank before getting started on buying your first house?
So yes, I do like that idea because you really, even if you do a zero down payment program, the chances are there's going to be some closing costs involved unless you can get the seller to pay for everything. Even with Mishta, once in a while, depending on the purchase price of the house, there's up to a $10,000 grant. Doesn't mean the house that you're going to buy is going to qualify for the up to $10,000. And it doesn't mean there's not going to be anything left over. So let's assume we're going to be doing a standard 3% down conventional loan or even an FHA loan. So you want to have, I would recommend 5% of the purchase price of the house. So if you're looking at a $200,000 home, you're going to want to have 10 grand in the bank for your down payment and an additional 2 to 3% for closing costs. Now, obviously, Kim's an amazing realtor and she's going to help you try to negotiate seller concessions. So maybe we don't need all that, but definitely the more money you have in the bank, it's going to be easier to do. And just like Kim said, mortgages, we look at your credit, your income, and your assets. You can be weak in one of those areas as long as you're strong in the other ones, right? So if you have a low credit score, but you have a good income and you have enough money in the bank, that can often overpower the low credit score. We can still get you qualified. So, but if you have a low credit score and low assets, it makes it very, very hard. Right now, we're looking at, we have no choice but seller concessions or no choice but a grant. So the more money you have in the bank, the better. I'm not gonna lie to you. So you're gonna want, 5% for the purchase price and around 2 to 3% for closing costs. And then we go from there to do the best of our ability to make that as low as we possibly can.
Yeah. I want to throw something in there. So besides what's going to cost to close your house, you guys, you want to have a slush fund too. Becoming a homeowner is expensive. Things can happen, and you want to be prepared to take that on. We never want to see you move into a house and be completely house poor. So it's really, like I said, you might get a pre-approval letter that tells you can get $350,000, but you need to take the time to understand what that payment looks like. And really what's going to go into that to make sure that, maybe you saw what the payment's going to be at 300,000, but maybe now we should refine it to 250 because you like that. It makes you more comfortable in your life. So those are things that a really great lender will help you understand as well. Just not like, here's $500,000, go for it. Best of luck because you can. Just because you can doesn't always mean you should. So I think you should have, there's not really a specific amount. It really is going to be based on your lifestyle, the bills that you have. I personally, in my own life, like to have 3 to 6 months stacked up in the bank, for emergencies should they come up. So that's my answer to that question.
I like using real life scenarios, and the house that I'm in right now, I'll give you an example. It's not my first time home, but this is very common for everybody, whether it's your 10th home or your first home. I went to Home Depot, needed to go get we just bought a house, we just moved in, and I needed some screws to fix some wood decking that was in the backyard. And my wife decided she wanted to come with me. And what should have been a $2 trip turned into a $2,000 trip. So, so that stuff happens, right? And you're buying a new house, you're a first-time homeowner, whether you're living with your parents or you're renting an apartment or renting a house, you still have to furnish that new house, right? There's still stuff that's going to come in. Now, when you were renting, you didn't need to buy a lawnmower. Now you do, right? So keep in mind these things. Ultimately, you're the client. I'm always going to stand on my soapbox. I'm always going to give my opinion. I'm old enough probably to be everyone's dad in here almost, even though my beard makes me look really young. Just remember, we're always gonna be open. We're always gonna be honest with you. We're gonna tell you the positive and the negative. My job is to educate you and give you the information so that you can make that decision. And if we're using every single penny that you have, and at the end of the day, it's your decision. But we always want what's best for our clients. And I don't want to see anyone be house poor, go broke, for moving into a house.
My father, when I bought my first house, it wasn't really a piece of advice, but he dropped this line on me, you guys. And he said, great, welcome to your new house. You now need 1,000 things that cost $20.
Yes.
That's how true. That is the most true thing I've ever heard. Okay, so we have somebody in from Ohio. They want to know if you have any idea if there's anything like the MISHA program that they have in Ohio.
I don't know personally. I'm sure there probably is on some level, but I can't tell you for sure. So your best bet would be to talk to a local lender in Ohio.
Yeah. Okay.
And find out what options there are. Or you could what I would do is I do a Google search, Mishta in Ohio, and see what pops up. Maybe some type of brother sister type of government agencies in Ohio, and that automatically pops up organically.
Yeah.
Or just grant programs in Ohio. That would be my recommendation.
One thing about us as a real estate agent and a lender, we are, I know I'm only licensed to work in the state of Michigan. You can't go state to state with that. So I don't know if some people
I
don't.
can. I'm licensed in a few states, but unless we're in Florida, and I don't know if they told you yet, but we're going to be licensed in a few other states here shortly. But I won't divulge that yet, Kim. I don't
Okay.
want to get in trouble. But yeah, so right now, I just primarily let's talk about Michigan because that's what we're both familiar
Yeah.
with.
So Joe, a question, well, not, I know the answer to the question, but I want to share the question with everyone. You had talked about how you can negotiate seller concessions on your behalf. So I want to explain what that is. Seller concessions, there's two routes you can go. Let's say we went through the inspection and the furnace was on its last leg and we know it's going to cost $5,000 to replace it. And we want that to be considered in our offer because we think it's something pretty vital to, the house working in excellent condition. And we feel we need to negotiate on that. There's two routes you can go with that. You can take a lower price for the house. But Joe, I mean, speak on this, lowering, let's say it's a $250,000 mortgage and you lower it to 245. That's what, going to change your payment by like $5 a month or something?
Yeah, $15, $20 a month.
So you can save $15, $20 a month over the entire life of your loan. Or you can negotiate $5,000 in seller concessions. What that means is the seller, when they close the loan or they close on their house, the title company is going to take $5,000 of the profit they made and apply that towards your closing costs. So that's $5,000 less out of pocket that you have to bring to the table. So true bang for your buck up front. If you are coming in and you need some repairs made is generally going to be seller concessions. Now, the amount that you can ask for and the amount that you can use is definitely regulated, but there's definitely some good things that you can work with there. We've seen some really great success with those, especially recently. Once again, that's something that's coming back. Seller concessions a year ago, they literally would have laughed you off the table. And now the buyers have control and you're getting seller concessions, all these great terms, things like that are going to make it much more obtainable for you, especially if you're already coming in and you already have like a low down payment program. Now somebody's going to contribute some money towards your closing costs. Just like that, you might have thought you had to spend a ton of money. Just like that, it became just a little bit more obtainable. So these are all things that we can look at during a phone call with either Joe or myself, the mortgage wise, obviously to Joe, but we can come up with a game plan if you don't have a lot of money, and to what we can do. And obviously, negotiating each house is going to be a little bit different, but if we have a game plan going in, we can know what we need to do for you to be able to, once again, set you up for success and help you get into the best possible situation into your new house. For sure. Any other questions from all of our attendees today? I have a few more I can throw at you. We went over how long does it take to purchase a house. Oh, let's talk about this. What are the out-of-pocket costs that are associated with buying a house that are not closing costs? So there's three major things during the process that you want to buy a house. They happen pretty quickly after your offer is accepted. Number one, you're basically going to put a good faith deposit down, an earnest money deposit, and that's going to be collected from your realtor, held in an escrow account with the broker, so nobody really has access to it. It's money that's put in place to show that you have good faith in the deal and that you're really committed to moving forward with the transaction should everything go right. So usually that's about 1 to 2% of the purchase price. So let's say you're buying a $250,000 house, probably going to be about $2,500 to $3,000. You're going to have to come up with out of pocket. Generally in a perfect world, you go through the process and that money is applied towards your closing costs. So it's not like an extra thing. It's just an upfront thing.
Still has to be verified, cannot be mattress money.
Cannot be, nothing can be mattress money, you
Nothing
guys.
can be mattress money, except for your home inspection. That's the only exception.
Home inspection, because you're paying an inspector. So another thing that's going to come out of pocket is your inspection costs. Generally for that, I would budget probably $400 to $500. The inspections that you're going to want to get done are really going to depend on which house you're buying. If you're buying something that's on well and septic, you're gonna have to get a well and septic inspection done, and that's separate from the general home inspection. If you're buying something that's in a neighborhood and on a sewer, you're gonna want to get a sewer scope done, which is an additional inspection. Things like I said before, we can check for radon, carbon monoxide, things like that. They're gonna go and they're gonna cost you a little bit of money up front, but it's gonna really, like I said, make sure that your house is in a really sound, safe, and working condition when you get in the door. And then you also, most lenders will make you pay for your appraisal when it's ordered. The appraisal is a third party that comes in that determines the value of the house in today's market. So they're ordered by the mortgage company. I think it's about $500, Joe. Is that right? $500?
Actually, it depends on the program. Some of the government programs, they're fixed, but yeah, on average, I'd say around $550. But that also gets credited towards your closing costs. Oh, so just so I thought I was muted, I'm sorry. So
No.
yeah, that does get credited towards your closing costs, and you can use a credit card to purchase that.
Yeah. So that's awesome. So those are the three things you have to pay after those things are done. And those three things happen pretty quickly up front when your offer is accepted. After that, you're kind of in a waiting period, waiting for your financing and everything to process through. And then obviously when you get to closing, you're going to know in advance what your cash to close is, and they'll take into account what deposits you've put down, if you paid for the appraisal, all that good stuff. So those are your three main things up front you have to pay for. So you have to be ready for that. What else do we got, you guys? Let's see. We talked about how long it takes to get a mortgage. What does it mean, Joe, to refinance? I don't know if everybody would know what that means. We talked about a little bit with locking in interest rate, things you can do if it goes down.
So thank you for bringing that up, because I was actually that's a good segue to what I was gonna add to it. So a lot of people right now in this market are holding back on buying a house because the interest rates are high, or at least they're still historically low compared to what they've been, but they're higher than what they've been over the last few years. So a lot of people have taken themselves out of the market waiting for interest rates to drop. I will tell you right now, about 85% of my clients are in that exact situation where they've decided to wait until things get in the fours or threes again. Probably never going to see threes again, at least for a very, very long time, but they're waiting. And in a team meeting we had, and we got probably about 40 bankers, 35 bankers at John Adams Mortgage. Several of them, three of them, are in the top 100 lenders in the country, meaning the top 100 lenders as far as dollar amount closed and total transactions closed. They would also say that about 85% of their clients are waiting as well. The reason why I bring this up and why now is a good time is because in Michigan, wintertime's a slow time. There's not a lot of buyers out there typically, because no one really wants to move in the wintertime in the state of Michigan. Every house I've bought, all three I've bought, by the way, I've done in Michigan strategically during the wintertime. For that reason, less competition. But what happens is if the interest rates do start dropping, now what you have, because we have historically low inventory levels too, Kim, I think you can back me up on that. Even though it's a low time to buy in Michigan right now in the wintertime, inventory is still lower than what it would normally be during the wintertime. What happens when interest rates drop? I know if my company has roughly 80 to 85% of our borrowers waiting, I guarantee you that's going to be the same throughout every single lender in the state of Michigan. Now what happens is interest rates still are high, but they're low enough for people to get into the market. Now you have an influx of millions of buyers into the market. And we entered into the same situation that we had a year ago, where now property values are going up, no more seller concessions, inspection waivers, you're going over asking price to get a house, you're doing gap coverage on an appraisal. And now you have higher interest rates as well to boot. So now is the time to buy before things start picking up. And that leads into the segue for refinancing. So there's a saying, I absolutely hate it, but it makes sense. So I'm going to say it. You date the rate, you buy the house.
Oh, we hate
I absolutely hate
true.
that. I'm like Kim. I am the least
Hate that word. I hate it.
I'm the least salesy person that you will talk to when it comes to mortgages. I treat clients the way that I want to be treated. Just open and honest and straight with you. I hate it, but you know what would happen in a market like today, say, Joe, the interest rates are a little high. I'm going to take a step back. Well, the industry insiders, the people on the bond market, the people that price long-term securities on the secondary market, mortgages, they feel that in the last quarter of this year or this time next year, there's going to be a refinance boom. So what does that mean? That means that everyone that bought in the 5s and the 6 and the 7% interest rates, the interest rates are going to actually be low enough where they're going to want to refinance the property and refinance it into a lower interest rate. So that's what a refinance is. You already own the home. You're in the home, you've been in it, whether you've been in it for a year or for 20 years, you want to refinance, whether you want to take equity out in the form of cash, maybe you want to do some updates, or maybe you just want to get a lower interest rate. You can refinance your property to lower interest rate. So the moral of the story is, with everything that I've told you and the timing of when they're anticipating the interest rates to drop, if you bought a house, if you came to me with an accepted offer today, we would be able to close in roughly 45 days. I don't like saying the 45 days because that's scary. Kim may need that on her end, but roughly it's 30 days. I'd be able to get you closed 30 days or less. And then your first mortgage payment wouldn't be until April 1st. And then you're only making 7-8 monthly payments on that mortgage before you're in a position to refinance. So it's not like you're going to have that higher interest rate for a very, very long time.
Yeah.
Okay.
I know when I bought my house the first time, we refinanced within 6 months. So, I mean, yeah, that happens a lot. So don't, like I said, it's easy to get stuck on it. Oh my gosh, I got to pay more money for the same exact product, but it's very variable. So don't get caught up on the interest rate, unless it's an absolute deal breaker, obviously, but we'll cross that bridge when we have to get there.
Plus, what are they anticipating? Because property values, even though there is a recession and inflation and all that stuff, property values are still increasing overall on average, especially in the areas, Kim, where you serve. It's still a hot market, and I think they're anticipating a 5 to 10% by the end of the year of an increase in property values this year.
Yeah,
So
we haven't seen anything major like, prices coming down or anything like that. Like I said, the prices are remaining strong. We're just seeing more in the background, as to the sellers and what they do to contribute towards the buyers. And the offers we're seeing accepted. Unfortunately, the prices really aren't going down substantially. Maybe we've seen like a tiny bit, but there's been no crash. There's been no, plummet of the market or anything like that, really anywhere. Does anyone have any other questions, you guys? We've been doing Q&A for about 30 minutes. We're so thankful that you guys stayed till the very end. And we hope this was really beneficial to you and answered a lot of questions that you might have had. Once again, my name is Kim Koss. I'm a realtor here in Michigan. And I would love to speak with you directly and come up with a game plan and work with Joe to really get things moving for you. So I dropped that link in the chat again. Once again, if you're not quite ready for that, that's okay too. Would still love to connect with you. So that way, when you are ready in the future, we can be here to walk you through the process. So if there's nothing else, we have one more chat maybe. Let's see. What's the other thing besides a pre-approval letter? Not sure what you mean by that. What's the other what do you mean?
are you talking about documents?
Like documents or pre-approval letters, like your golden egg. That's the thing that tells you how much you can spend, type of financing you have. There is a breakdown you'll get at some point during the process, depending on what house you get, as to the cost associated with that. But I'm not sure what you mean. So if you could elaborate on that at all, I apologize.
Well, if you're talking about documentation, a lot depends on what type of employment you have. So for 90% of the people out there that are W-2 employees, whether you're salary or you're hourly, it's pretty basic as far as documentation that I would need to get you approved. We need your 30 days of your most recent pay stubs. We would need the last 2 years of W-2s, the last 2 months of any bank statements, asset statements, and then your driver's license front and back, and that would pretty much be it to get you approved for a mortgage.
Yeah. Hopefully that answers your question. I think from there, I think that's most of everything that we need to go over. If you have any specific questions that you're not comfortable sharing with everyone, And once again, if you want one more one-on-one and to really go over your specific situation, we are always here to chat with you. Like I said, we're not pushy salespeople. We're here to provide value to you, to show you that we're knowledgeable, and really help you and guide you through the process. So that's why I really like Joe, because he kind of works like I do. We're just genuinely good people here to do good in the world. So we hope to talk to all of you again soon. We appreciate you coming. And yeah, thank you so much for coming. Sponge looking for talking again. Thanks for booking a call, Logan. I saw that come through. We'll get that confirmed. Alrighty. Thanks for coming, Alex. Hope you had fun, even though you're in Ohio. That's okay.
Good night, Kim. Good
thank you.
job.
Thank you. Thanks for all your help. I appreciate you.
No problem. I'm gonna end the meeting now, okay?
Bye. Bye, Joe. Thank you.
Bye. Thank you so
Bye.
much for having me on.